Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The headlines. The Philippines taps the international debt market to raise billions for crucial projects. But how much debt is too much? President Donald Trump issues a new threat, tariffs on Europe and Canada. Will this escalate into a full-blown trade war? A federal judge blocks Trump's bid to restrict birthright citizenship, setting the stage for a major legal showdown. Plus, the World Economic Forum is underway in Davos, Switzerland. What does it mean for global trade and the Philippines? We'll hear from Ambassador Manuel Antonio Teehankee, the country's permanent representative to the World Trade Organization. First, let's take a look at how financial markets performed overnight. Now, the S&P 500 closed at a record high Thursday as investors weighed mixed corporate earnings and comments from President Donald Trump, including calls for interest rate cuts and lower oil prices. The Dow Jones Industrial Average higher by 0.9%, the S&P 500 up by 0.5%, and the Nasdaq up by 0.2%.
I think that obviously, Trump's comments in Davos shows he's going to be a very active president. I mean, it's been very busy the last few days. I think the specter of what his administration would bring, we've already had that, a couple of years ago. And stocks usually like that. Stocks like deregulation, stocks like holding some folks accountable.
European markets also finished higher. The UK's FTSE 100 rose 0.2%. Germany's DAX up by 0.7%, and France's CAC 40 up by 0.7%. U.S. President Donald Trump takes aim at the European Union and Canada in a remote address to the World Economic Forum in Davos, a speech that could heighten global trade tensions. Trump renews tariff threats, accusing both of unfair trade surpluses with the U.S. He also criticizes former President Joe Biden and dismisses long-standing Davos priorities, including climate policies and diversity initiatives. Additionally, he demands that OPEC lower oil prices, raising concerns about energy costs and global market stability.
Hundreds of billions of dollars of deficits with the EU. And nobody's happy with it, and we're going to do something about it, but nobody's happy with it. So I think the EU has to speed up their process. Friends of mine that are in some of the nations within the EU, great people, they want to be able to compete better, and you can't compete when you can't go through the approval process fast. There's no reason why it can't go faster.
Trump's remarks signal a more aggressive trade stance, which could reshape global economic relations, impact markets, and create uncertainty for businesses worldwide. U.S. President Donald Trump says that he will appeal a temporary restraining order blocking his policy to restrict birthright citizenship, a move that could have far-reaching effects on immigration, labor markets, and the U.S. economy. Seattle federal judge John Coganer issued the TRO on Thursday, calling the order blatantly unconstitutional. The policy has already triggered 5 lawsuits from civil rights groups and Democratic attorneys general from 22 states. They argue that Trump's order violates the citizenship clause of the 14th Amendment, which guarantees that anyone born in the United States is a citizen.
Mr. President, a U.S. judge temporarily blocks the birthright citizenship order. Do you have any reaction?
No, obviously we'll appeal it. They put it before a certain judge in Seattle, I guess, right? And there's no surprises with that judge.
If upheld, more than 150 newborn children could be denied citizenship each year, according to Democratic-led states. Business leaders warn that restricting birthright citizenship could shrink the future workforce, impacting economic growth and labor supply, while immigration restrictions remain a key issue for the global community. An economic watchdog is sounding the alarm on Trump 2.0, warning that his crackdown on illegal migrants could deal a major blow to the Philippine economy. Francis Folve has that story.
the exchange rate could possibly fall to over 60 to $1 due to the widening trade deficit and weakening foreign remittances to the country. According to Ibon Foundation Executive Director Sani Africa, data from the accounting system on remittances shows that 50 to 55% or more than half of incoming remittances from abroad came from the United States.
Without any precision, walang duda, the biggest source of overseas remittances is the U.S.
This is why Trump's 2.0 crackdown on illegal migrants is expected to have a significant impact on the Philippine economy.
All illegal entry will immediately be halted, and we will begin the process of returning millions and millions of criminal aliens back to the places from which they came.
Well, right now, there are about, I think, 300, depending sa estimates, about 330 to 370,000 undocumented Filipinos in the U.S. So, if the first wave of undocumented Filipinos are sent back to the Philippines, whatever they would have been remitting, wala na yon.
The Philippine Embassy in the U.S. had earlier warned undocumented Filipinos and urged them to return home before Trump's crackdown policy takes effect. While many PhilAm support Trump's move, it also poses risks to some of them or their relatives.
Because the second wave is also cracking down making it harder even for legal migrants. Kaya nakatakot yung mga Pilipino na nagsasabi, we support that crackdown kasi naghirap kami to stay in the US, not knowing it's a slippery slope eh. Because if you're cracking down on migrants to protect American jobs, low-hanging fruit, undocumented. But kung yung logic na yan can actually extend to tighter visa requirements for Filipinos and other nationalities.
Because of this, foreign investments could decline unless the Philippines secures large foreign loans to offset the drop in remittances.
The Philippine government does not have the reserves to protect the peso. It will just get worse if, again, volatile yan, if the Trump administration takes economic policies that actually cause more global volatility. In general, there are much more reasons for the peso to fall below 60 pesos than reasons to believe it will strengthen.
Africa also added that the ongoing territorial dispute between the Philippines and China is affecting the economy. This impact is already being felt in the tourism industry, as seen in the decline in Chinese tourist arrivals in 2024, which was previously a key source of foreign exchange.
The Philippines should realize it is in a geopolitical sweet spot. Both the US and China actually have an interest in the Philippines. So we argue if the Philippines had a longer view of development in mind, it can actually use being in that sweet spot to get concessions for technology, investment, aid, trade, tourists from both the US and China.
Technically, the Philippines could use the situation to its advantage to facilitate an exchange of economic benefits among the Philippines, the United States, and China. The question is, what steps will the government take? Francis Polbe, Bilyonaryo News Channel.
Former New York Mayor and billionaire Michael Bloomberg is stepping in to help fund the U.S. contribution to the UN climate body's budget through his philanthropy arm, a move that could have wider implications for global climate efforts and sustainable investments. The funding fills a gap left by President Donald Trump, who has cut support for international climate initiatives. Bloomberg, who also serves as a UN Special Envoy on Climate Change, has not disclosed how much his foundation will actually contribute.
The American government may have pulled out of the Paris Agreement, but the American people are committed to its goals, and there is nothing Washington can do to stop us. Let me remind you again, halfway there already with virtually no help from the federal government. We are going to get there.
Bloomberg also pledged to work with states, cities, and businesses to ensure the U.S. stays engaged in global climate efforts. This matters for businesses, including in the Philippines, as climate policies shape investments, regulations, and market trends, especially in renewable energy and in sustainable finance. Now, here at home, the Philippines is tapping the international debt market this year to raise billions, a move that will help fund critical projects, but also add to the country's debt burden. The government has launched a 10 and 25-year dual tranche dollar bond offering, along with a 7-year euro sustainability bond. Although the exact amount was not disclosed, global bond issuances typically start at $500 million. Finance Secretary Ralph Recto says that the funds will go toward infrastructure projects, social services, healthcare, and education. In a nutshell, this means that the government is securing funds to keep the economy growing, but it also raises questions on debt sustainability and future repayments. The Philippines is boosting efforts to draw more foreign investments with a new promotion plan set to run until 2028, a move aimed at driving economic growth and job creation. Sujin Kim reports the country recorded $1.62 trillion in investments last year.
After recording 1.62 trillion pesos in investments in 2024, the government is ramping up efforts to further boost foreign direct investments this year. The Board of Investments is set to roll out its Strategic Investment Promotion Plan 2025 to 2028 by mid-year, a move seen as a strong complement to key economic reforms and policies. The European Chamber of Commerce has outlined its top priorities for this year, with the EU-Philippines Free Trade Agreement leading the wish list. Currently, the Philippines enjoys FTAs with countries such as Norway, Switzerland, Iceland, and Liechtenstein, granting duty-free market access and lower trade barriers.
It is also clear that the FTA has not reached its full potential. Norwegian companies and investors are increasingly drawn to the Philippines and the Philippine market, attracted by robust growth and strategic opportunities.
Norwegian Ambassador to the Philippines, Christian Lister, also pointed to booming sectors such as maritime, renewable energy, and seafood. Right now, more than 25,000 Filipinos are aboard Norwegian ships. On renewable energy, Norway is working with Aboitiz Power to build hydropower assets.
I am very optimistic that this trend will continue. Norway is committed to working with the Philippines, and Norway is very proud to support the Philippines in its efforts to achieve renewable energy targets with our companies.
These developments, in part, are credited to key economic reforms, including the recently enacted Create More Act. The Create More Act has benefited key sectors, including export-oriented businesses, infrastructure, agribusiness, and the BPO industry. Among the incentives are tax exemptions and enhanced deduction regimes. Among the significant reforms implemented, the government has opened 100% foreign ownership for renewable energy projects and expanded foreign equity participation in telecommunication and infrastructure sectors.
The Philippines is creating a business-friendly environment, or shall I say, a more business-friendly environment through incentives, streamlined regulations, and innovation-friendly reforms. Whether through Create More, renewable energy, fintech, or IP protections, investors are encouraged to seize these opportunities to drive growth and success.
Together with HARTA's efforts to cut red tape, these initiatives position the Philippines as a dynamic, forward-looking economy ready for global challenges.
Meanwhile, Undersecretary Seferino Rodolfo emphasized the strong potential for a bilateral free trade agreement between the Philippines and America, following Donald Trump's return to the White House, a development that could pressure the EU to finalize the long-awaited EU-Philippines FTA.
Because if you look at President Trump during his first administration, he was actually the only recent US president that welcomed a bilateral FTA with the Philippines.
Sujin Kim, Bilyonaryo News Channel.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
The latest news, national issues.
With regard to, was very vocal about charter change.
The political scene, the trust and approval ratings of President Bongbong Marcos and Vice President Sara Duterte decline, and conversations with prominent personalities.
Brings back wonderful memories of past Christmases when I was a little boy in Iloilo.
Be timely informed.
Hong Kong's Hang Seng leading the charge, up by 1.2%. The Shanghai Composite higher by 0.3%. And Singapore's Straits Times unchanged, trading with an upward bias, though, up by 0.1%. Now, here at home, let's pull up those figures. The PSE index, after gaining 0.5% yesterday on bargain hunting, the PSE index is trading in the red, lower by 0.4% to 63.54. The all shares index is down as well, down by 0.2% to 36.98. Taking a look at the sub indices, we are seeing a mixed picture here. The financials and industrial counters are taking the main gauge lower, down by 1.3% and down by 0.8% respectively, whereas the holding firms, services, mining and oil and property counters are trading in the green. Now, investors are really being cautious ahead of a changing global economic landscape. Analysts say that they expect Trump to have a more significant impact on the world this time around as the 47th president of the United States. They also say that tighter immigration measures could reduce remittance inflows from the U.S., from OFWs there, and this is going to affect consumer spending here. Note that the U.S. is the biggest source of OFW remittances for the Philippines. So until then, until there's more clarity and fresh positive catalysts, they expect the market to trade sideways, perhaps with a downward bias, which is what we're seeing today. Again, the PSE index is lower by 0.4%. Now, at the foreign exchange market, the peso opened stronger at 58.63 against the greenback, compared to its previous close of 58.69. Now, with world leaders gathered in Davos for the World Economic Forum, the big question is, how will Trump's return impact global trade and the region? The Philippine delegation is navigating a climate of cautious optimism as economic nationalism takes center stage and as ASEAN emerges as a key player in global trade. Meanwhile, geopolitical tensions in Taiwan are opening new investment opportunities. Earlier, I spoke with Ambassador Manuel Antonio Teehankee, the country's permanent representative to the World Trade Organization, about these developments. Here is part one of our two-part interview.
Hi, Ambassador Teehankee, and hello from Manila. You are in Davos at the World Economic Forum. Can you tell us about the participation of the Philippine delegation? What's the composition and what is your goal at Davos this year?
Oh, hello, Manila, hello, Maiki. Yes, it's an exciting time. The Philippine delegation, headed by Secretary of Finance Ralph Recto, Speaker Martin Romualdez, and Secretary Cristina Roque of the Department of Trade and Industry.
And you also have some members of the private sector with you, sir.
Yes, of course, and supporting the Philippine government, since the WEF is a public-private partnership. We have Mint, GCash here, Martha Sazon, and of course the CEO of Grab Philippines. And many other of our international partners are here.
And what's the thrust of the Philippine delegation this year amidst all the changes in the trade front?
Yes, so the message is clear that the Philippines is really open for business. Secretary Ralph Recto presented the incentives under the new Create More law. And of course, we are a very young, educated, well-connected population. And it's really the place for AI and infrastructure for high tech. And of course, GCash is one example of fintech leading the growth with $5 billion valuation now for Mint GCash.
Yeah, very in sync with the theme of this year's World Economic Forum, which is collaboration in the intellectual age. Okay, yes. Now looking at the bigger picture, let's zoom out a little bit. Can you talk to us about the mood at Davos following the inauguration and the first couple of days of U.S. President Donald Trump? He's making big moves, bold moves on trade. What is the general mood at Davos in response to his shakeup?
Yes. Monday, the first day of Davos, was the day of the U.S. inauguration. So, of course, there is a mood of cautious optimism. He announced, of course, his America First policy. And of course, there is some worry that this will lead to trade wars. At the same time, the pragmatic aspect, businessmen are aware that President Trump is a businessman and wants growth and progress as well as world peace for the globe, provided America's interests are protected. Of course, Philippines has always championed Filipino first as well. So our international interaction in trade or economics and investment is, should be, and must always be for the benefit of the Filipino people.
Okay, what do you think about this economic nationalism? Do you think, given everything that Trump is doing to protect the U.S. economy, do you think that there is going to be economic nationalism? Do you think it's going to be gaining traction worldwide?
Economic nationalism in a good way is very important, because if the nations or the citizens of one country don't get the benefit, don't feel the benefits of international cooperation and collaboration, then what are you doing it for? So I think the cautious optimism is that in the intelligent age, AI and high tech is an enabler of greater growth, greater progress, faster. And just the story of Grab Philippines, the story of Mint, Gcash, their tremendous growth during the pandemic is related to high tech. So that's the theme in Davos. The intelligent age is going to lead to greater prosperity, inclusivity, zero poverty. That's the goal.
Yeah, those are the big overarching goals for anything: inclusivity, poverty reduction. Going back to the WTO, the WTO is the backbone of global trade, with 164 members representing 98% of global trade. With Trump's protectionist policies, Ambassador Teehankee, how difficult is it making the job of the WTO moving forward?
Well, at the WTO, we have a mood of excitement. We're back in business. Trump has put us back on the map. United States actions in trade always come back to us in the WTO because it's a rules-based organization, treaty-based. So it's very clear President Trump has not withdrawn, and we are actively engaged with U.S. diplomats at the WTO. He has not announced new tariffs. He has said he will study actively where tariffs will benefit the U.S. So it must be win-win. I think in the WTO, our goal is sustainable development, prosperity for all. So the trade relations must be beneficial to the trading partners.
Interestingly, during Trump's inauguration, everybody was watching out for policy action on the trade front, but he didn't give any clear direction on trade. He didn't even really mention bold moves on trade during his inauguration speech. From the perspective of the World Trade Organization, why do you think that trade was not included during that inauguration speech? And what does that mean?
Oh, well, in fact, because every trade move has economic repercussions for your own economy. It's only very responsible, since we are now a globalized integrated supply chain. One has to be very careful when imposing new tariffs and see its repercussions on your own economy as well as your neighboring economy and the supply chains. So I think the Philippines is well poised to take advantage if there are moves against particular economies like Vietnam, Indonesia. We could be the destination for alternative supply.
How can the Philippines capitalize on the changing trade landscape?
Well, we have a very big presence here in Davos. The new Prime Minister of Thailand, I was able to meet her and take a selfie. And then the ASEAN chair, of course, Prime Minister Anwar Ibrahim, is also here, who's a close friend of the Philippines. He is ASEAN chair. And next year, of course, the Philippines will be the ASEAN chair, and hopefully President Marcos will be leading the delegation next.
How do you think the Philippines can win in this changing trade environment? What can we do to drive growth and investment in our country?
WTO?
Yeah, go ahead, sir.
Yeah, at the WEF and the WTO, ASEAN is at the WEF and WTO. ASEAN is indeed a bright spot. We are the 700 million population strong, and the ASEAN way has promoted growth and development in the whole region as well as with our trading partners.
Okay. What can the Philippines do to attract more investments on the trade front, sir?
Well, we presented Create More. Secretary Recto presented the new incentives, which actually brings down, if you look at it, to 12% if you look at the gross income tax rate for corporations. And then we have also less red tape and the enabling technology of computerization of government compliance. So I think this is one of the key. In the Public Service Act, for example, renewable energy is now 100% open to foreign investment.
Okay. On that front, it was in the news. Donald Trump announced a $500 billion investment in AI infrastructure. How can the Philippines get a piece of this?
Yes, so Philippines actually is a major supplier of semiconductors and chips. We have $50 billion of trade. And we also are trying to tap the high value added semiconductor industry. So with all the geopolitical tensions in the Taiwan Straits, we are a possible destination for further high-tech investment in Clark, in Subic, where we have all our free trade zones.
Okay.
And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel, always on time.